of an intentional moderate overshoot proved irrelevant to our policy discussions and has remained so through today. There was nothing intentional or moderate about the global inflation that arrived a few months after we announced our changes to the consensus statement, and I acknowledged as much publicly in December 2021. We fell back on the rest of the framework, which called for traditional inflation. Through the end of 2021, FOMC participants continued to forecast that inflation was
Don't drop the markets, brother.
quickly in 2022, with only a moderate increase in our policy rate. That projection was consistent with other central banks with different frameworks and the vast majority of forecasters. When the evidence showed otherwise, we hiked 525 basis points over a period of 16 months. The most recent data suggests that 12-month PCE inflation was 2.2% in April, far below its 7.2% peak in 2022, and in a welcome and historically unusual result.
Y'all better watch the markets. Powell about to watch the market. Watch what happens.
Employment that has often accompanied a campaign of rate hikes to reduce inflation. The economic environment has changed significantly since 2020, and our review will reflect our assessment of those changes. Longer-term interest rates are a good deal higher now, driven largely by real rates given the stability of longer-term inflation expectations. Many estimates of the longer-run level of the policy rate have risen, including those in the summary of economic projections. Higher real rates may also reflect the possibility that inflation could be more volatile going forward than during the near crisis period of the 2010s. We may be entering a period of more frequent and potentially more persistent supply shocks, a difficult challenge for the economy and for central banks. While our policy rate is currently well above the lower bound, in recent decades we have cut the rate by about 500 basis points when the economy is in recession. Although getting stuck at the lower bound is no longer the base case, it is only prudent that the framework continue to address that risk. While the framework must evolve, some elements of it are timeless. Policymakers emerged from the Great Inflation with a clear understanding that it was essential to anchor inflation expectations at an appropriately low level. During the Great Moderation, well-anchored inflation expectations allowed us to provide policy support to employment without risking destabilizing inflation. Since the Great Inflation, the U.S. economy has had 3 of its 4 longest expansions on record. Anchored expectations played a key role in facilitating these expansions. More recently, without that anchor, it would not have been possible to achieve a roughly 5 percentage point disinflation without a spike in unemployment. Keeping longer-run inflation expectations anchored was a driving force behind establishing the 2% target in the 2012 framework. Maintaining that anchor was a major consideration behind the changes in 2020, and anchored expectations are critical to everything we do, and we remain fully committed to the 2% target today. In the current review, the committee is engaged in discussions about what we have learned from the experience of the past 5 years. We plan to complete consideration of specific changes to the consensus statement in coming months. We're paying particular attention to the 2020 changes as we consider discrete but important updates reflecting what we have learned about the economy and the way those changes were interpreted by the public. In our discussions so far, participants have indicated that they thought it would be appropriate to reconsider the language around shortfalls. And at our meeting last week, we had a similar take on average inflation target. We will ensure that our new consensus statement is robust to a wide range of economic environments and developments. In addition to revising the consensus statement, we will also consider potential enhancements to our formal policy communications, particularly regarding the role of forecasts and uncertainty. As we have been reviewing assessments of the 2020 framework and of policy decisions in recent years, a common observation is the need for clear communications as complex events unfold. While academics and market participants generally have viewed the FOMC communications as effective, there is always room for improvement. Indeed, clear communication is an issue even in relatively placid times. A critical question is how to foster a broader understanding of the uncertainty that the economy generally faces. In periods with larger, more
look at this.
Shocks, effective communication requires
Let's look at the chart and see what's happening.
Our understanding of the economy and the outlook. We will examine ways to improve along that dimension as we move forward. So let me end by saying thank you again for being here. We've been looking forward to this. All of us have been looking forward to being with you today and having these conversations that will occur over the next 2 days. These discussions will help broaden and deepen our thinking about these issues, and they're critical to the success of these reviews. Thank you very much.
Thank you very much. We are going to just roll right into our first paper session today. On the agenda today will be sessions that address the two sides of the Federal Reserve's dual mandate.
What's up, Sir Crypto?
And also the strategies and tools used to pursue those goals. So I'm going to turn it over to my colleague, Stephanie Aronson, who will moderate this panel.
So what are my thoughts on Jpowell? It wasn't 100% positive. I mean, I think there's some things that need to be improved upon, especially with the framework of the U.S. I mean, looking at how much debt we're in with China and all these tariffs and all that kind of stuff. I'm not a politician by far, but I do not like the direction that we're headed right now. Not necessarily under this presidential stay, but rather over the past few years before that. With Biden and even with Obama. So, there's a lot of things that's been happening, a lot of things that we did not know that was happening behind the scenes, and of course they get unraveled when the next person comes into the White House. So. Again, Powell is a puppet, just like the rest of these politicians. Not all of them, but you have those who are led by the upper echelons and the real people that are in power. So that's one thing you have to watch and be mindful of. He's just a speaker, House Speaker. Pretty much, and he's gonna read off of a screen that he was doing a teleprompter, just like the rest of them, that somebody probably wrote for him. So, looking at this thing as a whole, I didn't. Let's see what the chart did, if it did anything. The market's gonna be opening up here in about 30 minutes. Actually, I'm sorry, 40 minutes or so. Let's see if we. No, it wasn't too bad. It wasn't too bad at all. Yeah, that's SPX futures. Powell said we may be entering a period of more frequent and potentially more persistent supply shocks, a difficult challenge for central banks. And I would agree. I would agree. Did he say anything about jobs being cut? I think I missed. I came in a little later, so. Yeah, so futures not really taking a hit right here. This is let me look at the day chart. Hopefully you guys can hear me clearly. If you can hear me clearly, put a 1 in the chat, please. I tested it. You should be able to hear me clearly. Let's look at the overall day. See what's happening. There's a lot of my charts, guys. There's way too much. Hold on. Yeah, okay. I got rid of a little bit of that. Yeah, it looks like we're in this little range right now. Will that change? It may change. Before this month, we've been in this freaking range from 59.20 to 5868 for a minute since the 12th, really. So we're boxing back and forth in here. Will we break out of this range and hit back towards all-time highs? I don't know. The sentiment looks a little bullish, but you just never know. Yeah, as you guys have been seeing. Oh, thanks, Richie. Thank you. You guys have been seeing that we've been getting whipsawed. The market yesterday was choppy. Like, yesterday's price action was just so choppy. Like, we traded right in the middle, pretty much the whole day. And I was like, are we gonna have any kind of breakout anywhere? No, we did not. QQQ was right in the middle. I mean, most of all these stocks were traded right in the middle in that range. So Here's what it is. Let me go back here. Let's see. Let's go. I love the 1 minute time frame too, and that's what you can trade in a lower time frame. Um, you know, if markets are choppy like that, you can definitely trade on a lower time frame. I have to admit, I've been winning some days and I've been losing some days too. Been taking a little bit of a beating uh, um, this season, but I'm doing much better than I was before. So I still have a while to go. Still have a long way to go, and you know, trying to recoup from some of the losses from last year's fiasco. So we're getting a little bit better. Things will recover for sure. Remaining optimistic. Oh, thanks guys. Appreciate you. Appreciate you so far. Okay, so let's take a look here. So this is the 1 minute futures. Yeah, we're still in that we're still in a tight range from my perspective of roughly about 60 points or so up and down, even tighter than that. Yeah, yeah. So just be mindful of that as you start your trading day today. What am I looking at today? Let's see. I usually kind of go look at the flow first and just to kind of take a look on exactly what I will see, but you just never know. Things always change up. But anyway, I just wanted to get on here and show you guys that. I will be back in later on today or maybe even next week or so, getting my bearings, getting myself, you know, kind of back into the system here again. And then I'll be going live with some trades here shortly. I've been pushing out a little bit of information here and there, a little bit of nuggets that I get here and there. Some are good and some may not be so good. But I know what's today, Thursday, Monday, I think I pushed out a little bit of information about Tesla. And that was before Tesla, I think, hit the 300 strike price. But the gamma on that was already, the gamma on that was already pushing, you know, the positive gamma was pushing towards that high anyway. And so now here we are, what's Tesla at? 347? Where's Tesla? Where the baby at? Y'all should be banking on Tesla. Y'all should be banking on Tesla, man, for sure. I don't know how I gave it to y'all, but I missed it. I didn't give it to you. It was already out there. The information is available. I'm not a psychic. I'm just saying that's what I was looking at on unusual flow. Yeah, so even Tesla's kind of in the range a little bit, but 360 was the high, or 350 was the high has been a high on Tesla. We hit it twice in a day. Wow. Yeah, actually just a little bit above that in one day, 350. But down here, excuse me, right there, 1055. Boom. That sucker took the freak off. Boom. What was the price? What was the price right there? 337. Let's go even before that. Let's go back to even before it shot up from 300. Where was that at? Where were we at? It's all happened in a day. Let's see, I think 300 was on Monday. 322. Give me, where's my 300 at? Friday. So okay, so we gapped up over the weekend. That sucker took off. So Monday, basically Monday, if you got in on that Friday, and boom, right there, right here, 9:30. boom. And of course, you had a massive, people were shocked. You had a massive sell off. People were shocked, like, what the? Wow, Tesla. Started taking them profits. And then we just kind of chopped, 319, 320, chop, consolidation, chop, sell, and then boom, off again. Took off again. Tuesday, another high, 326. Then same thing again, range, middle of that range right there. Little freaking cup and handle, whatever you want to call that. Cup closed, came back up, boom, again. And if you notice, I don't think we came back down and filled them gaps. So that's where we're at now. So, you know, Tesla has I mean, the premiums are nasty. But Tesla has a tendency to run up for a couple days and then come on back down, because that's money. That's money right there. Anyway, I hope y'all do well. We're at 347.68 right now. Look at Netflix. Netflix is freaking 1,150. I remember when Netflix, y'all, go look at 2010. When did Netflix come out? 05? 7? I think 2010 Netflix came out, if I'm not mistaken. This thing is just imagine if I would have put some money in back then. 19 years old, around that time. No, that was 20. 2005, 6. So I think somewhere around that time frame. But I remember when Netflix was $4 a share, $4. $4 a share. Like, Sir Crypto, I know you know, man. We be sitting like hotcakes and Berkshire Hathaway, freaking mini Buffetts. Anyway, y'all, I'm not gonna hold it for too long. I don't have too much more to go. Yeah, just work the bags, man. Work the bags. When they raise the price of subscriptions, print on the short. Yeah, absolutely, man. It's good to hear from you. All right, y'all, I'm gonna get off here. I just want to get here and give Powell the platform, see what happens. But I'll be looking at definitely looking at Tesla. See what's gonna happen today. I might play some SPY, SPX, whatever. Today, make a little couple bucks and move on about my day. But y'all, thanks for tuning in, and I will see you, if not the end of this week, next week. All right. Have a good one, guys and gals. Peace.